On its latest financial numbers, Apple stock, ticker symbol AAPL, of course, shot up. What's going on with Apple stock? I wanted to break this down from a value investing standpoint. The greatest value investor sold his Apple stock, portion of it, 13%. More than likely, Warren Buffett will sell more this quarter, especially after the big pop upward in Apple stock. Normally, when Warren Buffett does exit any kind of stocks, the price goes down. But Apple is doing $100 billion share back, which is it amounts to about 4%. And I've calculated that what's the earnings per share going forward to break down what's going on with Apple stock and why Warren Buffett, the greatest value investor out there, sold his Apple stock. And probably you should as well. There's other investments that are going to outperform Apple stock. Let's jump in and I'll show you some charts I'm looking at. Here's a look at the 4-hour bar chart on AAPL. This, of course, Apple stock. There's basically three big bullet points going forward with Apple stock and why we saw this big pop higher. Although one of those bullet points should have brought things downward. $100 billion share buyback. And it adds up to be about 4%. Although this pop higher, I wonder, that's from 170 up to 185. We're at 182.5 right now. It's about 4.25%. If the stock slides, maybe they can get 5% of the shares bought back. There's 15.5 billion shares outstanding right now. So the price moving higher, the effect of that $100 billion in buyback dwindles. You'd actually want to see the stock move lower, but investors kind of got overzealous on that. All right, from a value investing standpoint, when you're looking at Apple stock, you basically ask some simple questions. Continuously increasing revenue. Actually, unfortunately, not for Apple stock. They've really not had any kind of big product developments. In fact, they actually just killed the car and a couple other things this year. Apple has not necessarily come out with anything that's really outstanding that will drive revenue growth higher continuously. As a value investor, that is one of the things you're looking for is revenue, continuously increasing revenue. Warren Buffett, greatest value investor out there, sold 13% of his Apple stock. And I'll break that down a little later, showing you what he's buying instead, which is a huge thing. And it's exactly the same thing that I'm stepping into because of where the economy is. That goes to the next point. The economy itself, the consumer is taxed. Take a look at Starbucks, Yum Brands, Disney, Uber. There are many companies that are coming out saying, you know what, foot traffic has declined by some 4% worldwide for Starbucks and others. Uber is seeing lower numbers. Disney Experience, which is their parks, they're saying we expect no growth there, but they are seeing growth with their Disney Plus streaming. Consumers are taxed. The Federal Reserve has pushed interest rates up pretty large numbers and are going to keep them there. And that's incomes are finite. Individuals only earn so much money. And because of that, with higher interest rates, consumers are going to be forced to pay down debt at a higher cost. So how does that apply to Apple stock, Apple company? Effectively, they don't have any real rollouts that are going to really goose revenue growth. That's a huge thing. Now, a positive for Apple stock that I saw that kind of jumped out at me, net margins improved. So although revenue on a year-over-year basis for Q2 for Apple stock declined, revenue margins improved. We did see China saw something like 12% or 17% in the month of March increase in iPhone sales. Awesome. But Apple really doesn't have anything on the periphery that's going to really continually increase revenue based on their own product developments. At the same time, the U.S. economy likely to contract. We are at exceptionally high growth levels. I'm not saying recession. I'm saying we're at exceptionally high growth levels, GDP printing about 5.3%. it will normalize at the very least, maybe 2.5 to 3.5% growth for GDP. That means revenue growth for all companies, including Apple, which would affect Apple's stock, will decline. So what does Apple do? $100 billion share buyback. At the same time, Warren Buffett, he's got another option that will outperform Apple stock. So you're looking at lack of real growth within Apple. You're looking at an economy that is going to contract somewhat, if no more than just modest economic growth. Maybe not a recession, but at least we'll get down to a normalized growth rate. This will affect companies across the board, including the stock market, broadly speaking. So that was the 4-hour bar chart for Apple stock. Here is the daily, looking like it's kind of topped out, if you want, both those phrases. Here's a weekly chart, and as you can see, it on a condensed version, Apple stock has done incredibly well. I think since 2020, up about 120%. Here I tried to put together the March 2020 downturn, the broader stock market only producing 61% versus 125% for Apple stock. It has outperformed the broader stock market by double, slightly more actually. But it's what happens next that for a value investor that's really important. And I continue to go back to Warren Buffett, the world's biggest value investor, selling 13%. He's more than likely selling more now, especially since the stock popped higher. Warren Buffett, historically, when they do exit stocks, don't necessarily do it over the period of one quarter. He probably saw that stock pop higher, Apple stock popping up, and he said, hit the button on AAPL. We're going to go ahead and drop a few more shares. Here, Q2, 90.75. Look at backward, Q2 2023, 94.84 for 2023. Of course, Q2 2022, 97. Year over year, declining revenue. And if you look at some of the other quarters, it's the story. And Apple stock itself genuinely is overvalued at these price points, despite the $100 billion, which only amounts to about 4.25%, 4.5%, depending on where Apple stock is at any one time. $387.5 billion in annual revenue expectations for 2024, $410.9 for 2025. I do not see them hitting these numbers. And this will be a big shift for Apple stock. And it's not necessarily Apple's capability, so much more so as the broader economy as well. The consumer is starting to contract. And this is a thesis that some people just are really embracing, and Warren Buffett being one of those, myself included. I'm getting into the same thing Warren Buffett's buying, and I'll show you that in a minute. Here we're breaking down net margins. I did see for Q1 that net margins popped higher. And I was like, okay, you have less revenues, but higher margins. That's sort of a nice little mixed bag right there. Earnings per share, 2024, 657, 2025, 718. They don't hit these numbers. 2025, no, they're not hitting 718. And it's because of the economy. Let's break things down. U.S. Treasury yield, printing about the 10-year, which is the benchmark. This is where Warren Buffett always pivots to when he asks the question, what should I invest in? Well, what's the benchmark? The U.S. 10-year Treasury yield is the benchmark. Safest investment on planet Earth. He'll sit there and say, okay, 4.5%. What can I get that outperforms that will give me continuously increasing revenues, continuously increasing profits? He wants to be able to reasonably assume the future based on past performance. Now, notwithstanding, we're going to see an economic contraction, maybe not a recession, but a moderation in growth at the very least. He'll have to play that in. But what he's looking at is Treasury yields at 4.5%. All right, you take the 717 for 2024. That's the next 4 quarters. Apple price 184.57. Your yield. Now, when I say 717, let me go backwards. As I said in the intro, I adjusted. There's 15.5 trillion shares outstanding. Billion shares outstanding. The $100 billion is about 4.25%. Apple stock is a moving target. So I adjusted future earnings based on the Apple removing those shares from the share pool, outstanding shares. So this is a little higher, and I think analysts have current expectations at 685, 684, somewhere in that ballpark. So I'm projecting forward at 717. That being said, Apple yield with that 717, given the Apple share price at 184, 3.885%. That's a solid investment. Just two huge things. Number one, declining revenue, declining earnings per share on a growth rate basis. As a value investor, you're looking for just the opposite. You're looking for continuously increasing revenue. How does Apple pull that off? Where do they get that? They don't. So what do? Buyback, share buyback, biggest that we've ever seen, $100 billion. Because of that, Buffett selling his Apple shares 13% so far. How much more we'll see. But he can get a better yield out of the Treasury. Now, here's the thing that's super important about understanding U.S. Treasuries. The Federal Reserve is going to lower rates once they're done crushing the economy because of inflation. They will lower interest rates. There's an inverse relationship between price and yield. As yield goes down, price goes up. So Buffett is sitting on 4.5% yield right now. If the Federal Reserve drops interest rates to say 2.5, 2.75, 3, 3.25, what he's sitting on, yielding 4.5%, is worth a lot more to a future investor versus the future that the Federal Reserve will create when they lower interest rates. He's looking at profits. He's looking at Apple stock trading at 185, saying that's about as high as it's going to go. I can't get much more yield. Revenues keep declining. Let me dump some. I can get some profits out of treasuries. That's what he's playing. The stock I'm buying that mimics what Warren Buffett's doing, selling Apple stock, TLT stock. You can also do TMF stock. These are ETFs to trade on 20 and 30-year treasury yields. This is what I'm moving into. This is effectively what Buffett has moved into. It's just an ETF to make things a lot more easier. Given that, there's also something else I wanted to take a look at. This is what you're looking at here. This chart here is AAPD. It's the inverse single stock ETF for Apple stock. And I'm thinking I'm going to go ahead and buy into it just a little bit. Simply because I believe that this economy will contract over the course of the next 6 months. I'm already jumping in big on TLT stock. From there, I get to see Apple stock moving lower, but by using the inverse single stock ETF on Apple stock, AAPD is the symbol, this will appreciate in value. Maybe I get 20, 30% out of it over the course of the next 6 months. But the big pop upward in Apple stock itself, a little bit overdone. You're still getting a future yield of 3.88%, but the Treasury is at 4.5%. The consumer is starting to contract. We're seeing that. A tiny little blip on yesterday's initial jobless claims shows us that we're probably going to see a much bigger move lower in the economy, which would pull Apple stock downward. AAPD, now I've looked at some options. I trade stock options on nearly every single position. Bid offers like 0 at 190 for some of these options. I'm not even going to mess around with that because it's hard to value a 3-month option on something like that. And I'm just not even going to messing around with it. I'll buy it outright. I do not see Apple stock itself rallying, so my AAPD stock should appreciate in value. Maybe I pick up 5, 10, 20% over the course of the next 3 to 6 months. But unless Apple does another share buyback, which is entirely possible because they don't really have any product categories that's really going to drive investor value, plus in the economy that's slowing down, what else are they going to invest in? The Vision Pros are not going to overwhelm the world with purchases. It's a game changer of sorts, but it's going to take a while before they get there. Now, we do have the developer for AI. This better not flop. That's all I'm going to say about Apple stock with that particular event, because their commercial on iPads seem to have missed the mark, as they call it. If you're looking for value investing breakdowns for stocks, make sure to hit that like and follow button. Also, I've done a write-up on this for Substack, so if you want the written content on this, make sure to click the link to my Substack down below. We'll see you in the next video.